Well, hello, friends. Mark Martella here for Mark's Money Matters, your place for financial sanity and serenity. Well, while we wait for some people to hopefully join us, let me tell you a little bit about my fun start to my day. Well, I have a court appearance, a creditors meeting down in Fort Myers, which is about a 45-minute ride for me. So I get down there about 15 minutes early, find a parking spot, and start walking up the courthouse steps. As I start going up the steps, the trustee comes out of the courthouse and tells me the courthouse is closed due to a sewage backup. There will be no hearings that day. So you can make your own jokes about attorneys in the courthouse and a sewage backup. But so because of that, no court. I had to turn around for another 45-minute ride back, but I stopped at Starbucks to grab a cappuccino for the ride back, and I ran into a couple of attorneys I knew and chatted with them for a little bit, put a little sugar in my cappuccino, packed up and started heading back to my office, again 45 minutes away. Get to the office, go to my back seat to pull out my briefcase and realize that my briefcase is still in Starbucks in Fort Myers. So I turn around and head back to Starbucks to pick up my briefcase. So needless to say, my morning was very unproductive. So hopefully you had a better day than today, starting off March 1, the Ides of March. So what I'd like to talk about today is something that's always bothered me, is the crazily high interest rates that credit card companies charge. And I'm sure you've all had this experience. You remember getting your first credit card and may have a low introductory rate, and maybe, wow, you're so excited you got this new piece of plastic, you can decide to go out for dinner. And go out for dinner and you get that first bill and you pay it off. And then, you need something, maybe some new tires, something else, and it gets up to maybe $1,000. And now, well, you can't pay the whole $1,000 off when that bill comes in, so you pay half of it. Well, little by little, that balance goes up. And then maybe you missed a payment. You just got misplaced, or maybe waiting for that paycheck to come in, you couldn't pay it on time, and you had a late payment, and bang, you get hit with the high interest rates. Well, it's just a snowball effect. Do you know the story of the frog in the pot of water that's not on when he gets in the pot and then slowly starts to boil and doesn't notice the temperature increasing until it's too late and doesn't jump out? That's kind of how we get sucked in with the credit cards. It gets to the point where it's too late. And then we get a second card and a third card. And you can't get out from these high minimum payments now because the interest rate is so high. You could make the minimum payments when it was 12%, but when it's now 28%, you can't make the minimum payments. And the thing that always bothered me is, how do the banks get away with charging that interest rate? And why did it confound me so much? Well, for example, in Florida, we have what's called a usury law. And the usury law states that you can't charge more than 18%. When I say you, I mean you or I. So if you came to me for a loan, I couldn't charge you more than 18% interest per year. If I charged you more than 18% interest, let's say I charged you 22% interest, well, I would forfeit the interest because it's more than 18%. Now, there's also a part of the usury law that rises to the level of criminal. If I were to charge you 25% interest or more, I'm committing a criminal act. Not only would I be unable to collect the interest, not only would I be unable to collect the principal, I would also face the possibility of going to jail. But nevertheless, while you or I can't do that, banks can. Now, why can they do that? Well, there's a couple of reasons, but really the groundbreaking change came with the United States Supreme Court decision back in 1978 in the case of Marquette National Bank versus First Bank of Omaha. And the facts of that case were that They were both issuing Bank of America cards. And the bank in Minnesota, Marquette National Bank, filed an action against Omaha Bank to have them stopped or enjoined from issuing cards to citizens in Minnesota because the interest rate they were charging violated Minnesota law. Well, eventually this trickled up to the Supreme Court because you had entities from different states, and this was in federal court. And so the issue before the court was what state's law controlled. Did the state where the card users lived, did that control, or did the state where the bank was chartered control? In this case, Nebraska had a higher interest rate than Minnesota. Well, I guess you know the answer to that question. The court found that the place where the state bank is chartered controls. So, as a result, in order to attract big banks and businesses, some states like North Dakota and Delaware decided to say, hey, we'll have no usury law. You can charge as much as you want. And so if you never notice, depending on what card you have, a lot of them go to Sioux City, South Dakota. So look, that's one of the reasons. And that's when credit started to explode, because instead of being limited to maybe a state's 10 or 12%, now the banks can charge 25, 28, 29%, even higher in some cases. And by allowing the banks to charge a higher percentage rate, they can take on greater risks. They can give loans or give credit cards out to people who don't have the best credit, because if they have enough of them, they know enough will make the minimum payments where they can charge this maximum interest while just keeping that cash flow going and making it profitable for them. So we can thank the Supreme Court for that. But they relied on the statute created by Congress, the National Banking Act, and they interpreted to say that obviously Congress wanted a national banking system. The first National Banking Act is the act that allowed the present issuance of currency, and that's how they interpreted it. Well, let's go back to Florida and Florida's statute. Well, if we look at Florida's usury statute, it also has an exception. And like I said before, although you and I cannot charge these exorbitant interest rates, again, we can't charge more than 18% here in Florida, there's an exception. And the statute provides in the exception that it does not apply to state or federally chartered banks, savings and loans, and the like. So again, comes back to the legislature putting in these loopholes to allow the big banks and really their lobbyists and the donators to campaigns to create this system where you or I can't charge money, but again, the big banks can. Well, what's really infuriating, even more so than some of the interest rates that are charged by the big banks, are payday loans. Have any of you out there gotten a payday loan? Well, if you're not familiar with the payday loan, how a payday loan works is, again, here in Florida, the max is $500 that you can borrow. So you'll give a post-dated check to the company. They agree not to deposit it for anywhere from 7 days to 31 days here in Florida, and they can charge you a fee. And so typically it's for 2 weeks. Let's say, for example, you're borrowing $500. Well, they can't charge more than 10% of that as their fee. Plus, they can charge a processing fee. But 10% of $500 is $50. They're charging $50, or they're making $50 on a 2-week loan of $500. The interest rate is well over 300%. Now, what happens if after the 2 weeks you can't pay that back? Well, you can roll that over, and now it's another $50 that you owe them. Or there's an option. There's an option that if you request within 7 days of that becoming due, that loan becoming due, if you request, you can get a 60-day grace period. The only condition for that 60-day grace period is that you go for a credit counseling course. Well, I can tell you in my experience, if you wish to file bankruptcy, you have to take a credit counseling course. Clients hate to do it. It's like pulling teeth, and it's the last thing they do. They procrastinate and procrastinate and procrastinate. So if you're faced with having to take this credit counseling course or just rolling it over, I'd say most times people are rolling that over. I met with a client recently who had a loan outstanding for 6 months at $50 every 2 weeks. They now owe more than what they borrowed. Again, I don't know how these loans are allowed. Some states have made them illegal. But again, it's one of the ways that people in the worst position, the worst financial position, are taken advantage of by what I like to refer to as the wolves out there who are willing to take advantage of them. So again, that's why, again, the exceptions to the rule created by the legislature allow banks to charge interest rates as high as they want. Oh, I forgot to tell you, not only are banks not allowed or allowed to charge, excepted from the usury laws here in Florida, the usury law also says that if the loan is for more than $500,000, there is no limit to the interest that can be charged. So there you have it. Those are the reasons why credit cards can charge these type of interest rates that really enslave people and really force them sometimes to have to file bankruptcy. I can't tell you how many times I have met with a client who said, look, we were making the payments. We want to pay this back. But when they doubled the interest rate on us, we just couldn't do that. And so it forces people into bankruptcy. But again, it's all part of their business plan, despite the fact that they're telling you, oh, you shouldn't file and it ruins your credit. It's all part of the business plan. It's built into, they know how many defaults they're going to have. And here's the thing. One of the myths out there, once you go through bankruptcy and once you get your discharge, they're throwing applications back at you because they want to get you back on that hamster wheel of paying minimum payments so they can make their 28% interest. So again, hopefully you don't have to rely on payday loans. Before you do that, if you can find a friend or a relative that will loan you that money, and then really one of the things is you need to take control of your finances. And if you're looking for help, you can find it on the Money Matters website. It's markmartella.com. Just go there. You can download a free budget tool to help you budget. Also, we offer episode 13 is my 5-step financial sanity solution that will help you take control of your finances and bring some sanity into your life. So again, hey, thanks for joining me. If you have any questions, you have a topic you'd like to hear me talk about, just shoot me an email. It's mark@markmartella.com. And until next time, remember, you have the power to choose to live a debt-free, stress-free life. Take care.